Hey everyone, Joseph here. Thinking about jumping into Forex trading? You've probably seen people flexing profits, lifestyle, or wild claims. But here's the truth. Most beginner traders blow their accounts in the first month. Why? They skip the basics. They go straight for the get-rich-quick schemes and ignore the foundation. It's like trying to build a house on sand. It's just not going to end well. In this video, I'll show you exactly what you need to do first, the right way, to actually survive and thrive in the Forex market. We're going to break down the essential steps, the stuff nobody tells you, so you can start your trading journey on solid ground. Let's get into it. First things first, you gotta understand the basics. We're not talking about memorizing a bunch of jargon, but actually grasping how the market works. You'll be trading currency pairs, things like EUR/USD, that's the euro against the US dollar, or GBP/JPY, British pound against the Japanese yen. These pairs fluctuate in value and those tiny movements are measured in pips, basically the smallest price change that a given exchange rate can make. You make money by correctly predicting whether a pair will go up or down and capitalizing on that movement. Now, you don't buy whole currencies, of course, you trade them in lots, which are standardized units. And this is where things get interesting because of something called leverage. Leverage lets you control a larger position in the market with a smaller amount of your own money. Think of it like a loan from your broker. So you might see things like 100-to-1 leverage, meaning for every dollar you put up, you control $100 in the market. Sounds amazing, right? Well, it can be. But here's the catch. Leverage magnifies both profits and losses. That's why understanding things like margin, the amount of money you need in your account to open a trade, and spreads, the difference between the buy and sell price of a currency pair, is absolutely crucial. Don't just memorize these terms. Understand how they connect and impact your trades. For example, using 100-to-1 leverage without knowing what a pip is, that's not trading, that's gambling. A great place to start is the book Currency Trading for Dummies. Don't let the title fool you, it's a solid resource. Babypips.com is another fantastic website with tons of free educational material. And of course, nothing beats a hands-on demo walkthrough on a trading platform like MetaTrader 4, which we'll talk about more later. Alright, once you have a basic grasp of the Forex market, it's time to choose a broker. This is where you'll be executing your trades, so it's a big decision. And trust me, there are a ton of shady brokers out there with flashy ads and promises of easy riches. Don't fall for it. Look, if it sounds too good to be true, it probably is. So how do you find a legit broker? First, make sure they're regulated by a reputable financial authority. Some of the big ones are the FCA in the UK, ASIC in Australia, and CySec in Cyprus. Regulation means the broker is held accountable to certain standards, and your funds are somewhat protected. Next, check what kind of trading conditions they offer. You want tight spreads, the tighter the better, as this directly affects your potential profits. Low minimum deposits are also a good sign, especially when you're starting out. And make sure they offer a platform you're comfortable with, like MetaTrader 4 or 5. These are the industry standards for a reason. Finally, pay attention to their customer support. Can you easily reach them if you have an issue? Are they responsive and helpful? A good broker will have excellent customer service. Remember, a sketchy broker can manipulate prices, make withdrawals impossible, or even disappear with your money. Don't risk it. Do your research, read reviews from other traders, and choose a broker with a solid reputation. Now I know you're probably itching to start trading with real money, but hold your horses for a second. This is where most beginners make their biggest mistake. They skip the demo account and jump straight into live trading. Think of a demo account like flight simulation for traders. You get to practice with virtual money in real market conditions, without risking a single penny of your own capital. This is invaluable experience. Use this time to learn the ins and outs of the trading platform. Practice placing different types of orders, setting stop-loss orders, more on that later, and watching how different currency pairs move throughout the day. Get a feel for the market's rhythm, its volatility, and how news events can impact prices. The more you practice in a risk-free environment, the more comfortable and confident you'll become. And here's the key. Treat your demo account like it's real money. Don't go crazy with risky trades just because you're not risking anything. Stick to your strategy, manage your risk as if it were your hard-earned cash on the line, and track your results diligently. This is about building discipline and developing your trading skills, so take it seriously. Remember, the more you sweat in training, the less you bleed in battle. Alright, let's talk about risk management. This is arguably the most critical aspect of trading, yet it's the one thing most beginners completely ignore. They get caught up in chasing profits and forget that every trade involves risk. And let me tell you, in the world of trading, unmanaged risk is a recipe for disaster. The golden rule of risk management is this: never risk more than 1 to 2% of your total trading capital on a single trade. That's it. So, if you have $1,000 in your trading account, you should never risk more than $10 to $20 on any given trade. I don't care how good the opportunity looks, stick to your risk management plan. Now you might be thinking, but Graham, that's so little. How am I supposed to make any real money? And that's the wrong mindset. See, trading is not about getting rich quick. It's about consistent, long-term growth. And the only way to achieve that is to protect your capital. Remember, every dollar you lose is a dollar you can't use to make more money. So, by risking only a small percentage of your account, you're essentially ensuring that even if you hit a string of losing trades, and you will, everyone does, you'll still have the capital to keep trading and recover your losses. This is about playing the long game, not gambling on a few big wins. Here's another common mistake beginners make. They jump from one trading strategy to another, chasing the latest indicator or holy grail system. They think the more complex the strategy, the better. But the truth is, you don't need a complicated system with a million indicators to be successful in Forex. In fact, some of the most profitable traders I know stick to relatively simple strategies. The key is to find a strategy that aligns with your trading style, your risk tolerance, and your personality. Are you someone who prefers to follow long-term trends? Then maybe trend following is for you. Do you thrive on volatility and quick price movements? Then perhaps breakout trading is a better fit. Or maybe you prefer a more systematic approach with clear entry and exit signals, in which case, you might consider something like a simple moving average crossover strategy. The point is, there are countless strategies out there, but the best one for you is the one you understand, are comfortable with, and can stick to consistently. Once you've chosen a strategy, back-test it thoroughly. Look at historical data, see how it would have performed in different market conditions, and identify its strengths and weaknesses. And most importantly, track your trades meticulously. Keep a trading journal where you record every trade you take, the entry point, the exit point, your profit or loss, and most importantly, your thought process behind the trade. This will help you identify what's working, what's not, and where you can improve. Remember, consistency and discipline are key in trading. Find a strategy that works for you, stick to it, and constantly strive to improve your execution. Now here's the thing about trading. You can have the best strategy in the world, the most disciplined risk management plan, and a deep understanding of the market. But if your mindset isn't right, you're still going to struggle. Trading psychology is often overlooked, but it's absolutely crucial to your long-term success. See, trading is an emotional roller coaster. You're going to have winning streaks that make you feel invincible, followed by losing streaks that make you question everything. And it's during those losing streaks that your mindset will be put to the test. It's easy to stay disciplined and follow your plan when everything is going your way. But when you're facing a string of losses, that's when your emotions can get the better of you. You start revenge trading, trying to make back your losses quickly, which only leads to more losses. You start over-leveraging, risking more than you can afford to lose, hoping for that one big win to turn things around. You start chasing trades out of fear of missing out, FOMO, ignoring your strategy and jumping into trades without proper analysis. All of these behaviors stem from a lack of emotional control, and they're guaranteed to sabotage your trading results. So, how do you develop a winning trading mindset? First, you need to accept that losses are a part of the game. Every trader, no matter how successful, experiences losses. It's not about avoiding losses altogether, but about managing them effectively. Second, focus on the process, not the outcome. Instead of obsessing over profits, focus on following your trading plan consistently and executing your trades with discipline. Remember, you can't control the market, but you can control your reactions to it. And finally, practice patience and discipline. Trading is a marathon, not a sprint. Don't expect to get rich quick. Focus on learning, improving, and developing your skills over time. A fantastic book that dives deep into trading psychology is Trading in the Zone by Mark Douglas. It's a must-read for any serious trader. It'll help you shift your thinking from "I need to win" to "I need to follow my plan." And that's where real consistency and long-term success in trading begins. So, there you have it. The unfiltered truth about Forex trading. It's not a get-rich-quick scheme, but it can be a rewarding endeavor if you approach it with the right mindset and a solid foundation. Let's recap: learn the basics, choose a legit broker, practice on demo, manage your risk, pick a simple strategy, and master your mindset. If you do those things, you're already ahead of 90% of new traders. Like, follow, or subscribe for more real trading tips. No fluff, no hype. Let's grow together.